Today, we will be presenting on the shadow banking industry in China. Internationally, the global shadow banking financial system is valued at over $52 trillion. The sheer magnitude of this number highlights the importance of shadow banking in both national and global economies. So what is shadow banking? As you may have discussed in macroeconomics, shadow banking is the facilitation of credit to subprime borrowers. Like most aspects of economics, shadow banking takes on different roles in different geopolitical environments. There are a couple of trademarks of shadow banking, though, that exist in one form or another in almost all shadow banking systems. First, shadow financing is subject to almost no regulatory oversight, and that's the point. Unlike regulated and generally legal lending, shadow financing sidesteps many regulations that are previously put in place, and in doing so, introduces significant risk into the system. This risk can place a great deal of stress on an economy and can directly contribute to economic destabilization during an economic crisis. Though while risky, shadow banking does play an extremely important role in any economy. This is because shadow lenders have the unique ability to match supply of credit with demand that is unmet from the formal banking system. In China, interestingly, the shadow banking industry didn't really exist before the 2008 financial crisis, and since 2010, the size and value of the Chinese shadow banking system has increased over 8 times. The shadow financing system in China is relatively new and operates in ways different than almost every other country. This is because in China, the shadow banking system operates under Chinese governance, or at least it does in part. During the first and second phase of reform in the 1980s and 1990s, Chinese state-run banks had significant operational differences to most banks in other countries. These differences, both advantageous and disadvantageous, set the scene for the eventual emergence of a robust shadow banking industry, and this emergence ultimately took place after and during the Great Financial Crisis. From the beginning of opening up, China imposed extremely strict regulatory guidelines on their bank's liquidity. Combine this with the rapid increase in non-performing loans, and it quickly became very tricky for China's major banks to operate with high profitability. Following the Great Financial Crisis, the demand for financing increased rapidly, allowing for the rapid rise of shadow financing in China. This is shown on the graph, where it is clear that prior to 2009, shadow financing represented only around 10% of Chinese nominal GDP. However, by 2013, this number spiked to nearly 50% and continued to climb to near 60% by 2017. While 60 to 80% of GDP is far smaller in comparative size to the United States or Eurozone shadow financing systems, it's important to realize that size, while important, is not the main contributing factor to the massive influence the shadow banking industry has on China. In China, as mentioned before, there are 2 banking systems. The formal banking system, which is closely linked with the CCP and People's Bank of China and is regulated by the Communist Party, and the informal banking system, or the shadow banking system, which is mostly unregulated. In a traditional shadow banking system, the share of shadow financing facilitated by formal banks would have little impact on their balance sheets or regulatory measures. However, in China, this is not at all the case. In the Chinese shadow banking system, there are many financial vehicles used by both formal and informal banking systems to facilitate lending. Consequently, the formal shadow banking system is deeply integrated with every aspect of the Chinese financial system. And perhaps most importantly, this has major implications on the effect of monetary policy and money creation in China. The Chinese Central Bank, or the People's Bank of China, is the institution which the CCP would normally use to inflict monetary policy on the economy. But because of the architecture of the system, many other large banks in China are able to introduce money silently into the system as well. This is because of the deep economic integration of the shadow financing system in China and because of the nature of the financial vehicles that are used. In the Chinese shadow banking industry, there are 6 major types of shadow financing vehicles. The first and most common are wealth management products. These products come in many forms and, while ubiquitous today, are becoming increasingly phased out as a result of the CCP pressure. Second, we have entrusted loans. The issuance of entrusted loans is a process in which companies can lend money to borrowers through banks by using cash on their own balance sheets. Even in the realm of shadow financing, this is a highly risky and unregulated process, and for that reason has extremely high default rates. Fourth is peer-to-peer lending. Peer-to-peer lending has the highest default rate, second to only entrusted loans, and is another aspect of the shadow financing system that the government is attempting to exercise some legal control over. Fifth is the interbank funding process. This is a process which allows banks to increase leverage. As banks lever up, through generally forgery of their balance sheets, they're allowed to legally lend beyond their liquidity regulations the CCP mandates, allowing them to act in a more profitable manner. The last shadow financing vehicle is structured deposits. Structured deposits are deposits with high yields contingent on the lack of occurrence of an unlikely event, and they aim at removing traditional bank guarantees. Overall, it's through these 6 financial vehicles that the Chinese shadow banking system functions. On the graph on the right, you can see the percentage that which each shadow financing vehicle contributes to the entire shadow financing industry in China.
Next, we will look at how shadow banking is used in the Chinese economy and economies abroad to facilitate the financial process. Formal banks use shadow vehicles to pad balance sheets and increase perceived liquidity. This means that without going through regulations, they are able to improve the financial health of these banks. It was said also by Guofeng Sun that both traditional and shadow banking institutions partake in Chinese money creation through accounting treatments that generate liabilities from shadow assets. This means that the Chinese economy has an extra vehicle through which they are able to create money, which greatly helps them in international trade. Next, we will look at the changes to the shadow banking system that happened after 2013, since this was a period of very, very drastic change. First, between 2013 and 2016, the sector boomed, experiencing over 100% growth in the assets they controlled. Due to this tremendous growth, there were increased calls for scrutiny and greater transparency, since many people felt that having such a large portion of the economy go through illicit back channels was unsafe. This was also not aided by the fact that the Chinese banking liquidity crisis was partially caused by shadow banking. In this crisis, regulators refused to assist in easing economic uncertainty and therefore caused a much greater collapse than before. Since then, there were many, many failed attempts at regulating the sector. That is, until Guo Shuqing, pictured on the right, was declared chairman of the Banking Regulatory Commission. Since taking over, serious crackdowns on the industry have occurred, including large investigations into firms finding just how much of their business happened illicitly. Finally, we will compare China's shadow banking system with the rest of the world. Because every single country puts regulations on how financial transactions can occur, every country has established some form of a need for shadow banking. As we can see on the two graphs on the right, shadow banking is much, much larger in some other countries compared to China. These differences are primarily based on the form of government in each of those respective countries. Since China has a rather controlling government, illicit financial institutions are much more difficult to establish there. However, we can find some other interesting differences. Whereas in China, much of the shadow banking market occurs through traditional banks, in the rest of the world, it typically happens on the primary market, adding another layer of protection against government scrutiny. It also always takes form of different financial instruments. In China, we see a lot of wealth management instruments being used, whereas that is almost never the case in any other country. It's also much more difficult to control in China due to the increased government grip on financial institutions. In conclusion, China, like almost any other country with a developed financial system, has a massive shadow banking system looming underneath it. This shadow banking system is unregulated financing for subprime borrowers, or people who typically could not get financing through traditional means. In China, this process started during the reform and opening up period, and was largely motivated by strict regulations on traditional banking. The industry boomed in the wake of the financial crisis, as stricter rules were placed on traditional banks, and therefore more people were considered subprime and had to go to shadow banking institutions. It's now typically used to assist bank liquidity, which is more important after the financial crisis. Recently in China, attempts at regulation have largely been unsuccessful. However, we are seeing an increase in successful investigations into companies that rely heavily on shadow banking. The differences in government structure have set apart China's system as one that operates through channels many other countries would deem not appropriate for shadow banking. Thank you for listening to our presentation.